In today's video, we're going to talk about ETFs within cryptocurrency and understand exactly what they are and how we can make the most of them as crypto investors. Nothing I say is financial advice. Always do your own research before investing any money. Let's get into it, guys. Now, as I'm sure you're aware, the world of crypto can be very scary and difficult to understand as a new investor. And typically when you're investing in crypto, you might be investing in an individual token like Bitcoin or Ethereum or Cardano. And that means that you buy that token, and if it goes up, you make money, and if it goes down, you effectively lose money. But an ETF is something slightly different. An ETF is effectively an exchange traded fund. Now, these have been around since the 1990s, but traditionally were used with the stock market. Now, basically what this is it pulls a group of assets together into one place, and this enables the investor who may not be that savvy with the individual token to invest in a wider range of assets. This makes for much less risky and much less volatile investing, because for example, if you invest in Bitcoin and everything else goes up around it but Bitcoin doesn't, then you're not going to make any money. On the flip side of things, if you invest in Bitcoin and Bitcoin goes down but everything around it doesn't, then you're going to lose quite a lot of money. But the ETF basically groups everything together, and it protects you from one individual asset falling apart, but effectively by grouping them all together, you are then protected against a huge dump towards the downside in one of the tokens, or perhaps a massive rally you're not going to miss out on in one of the tokens also, because you also have exposure to it through the ETF. Now, to understand what cryptocurrency is, if you're new to the game completely, well, we have to jump across to Investopedia. So what is cryptocurrency? A cryptocurrency is a digital or virtual currency secured by cryptography, which makes it nearly impossible to counterfeit or double spend. Many cryptocurrencies are decentralized networks based on blockchain technology, a distributed ledger enforced by a disparate network of computers. Now, that might sound very confusing, but ultimately you can't create basically a physical asset from a cryptocurrency. It's basically completely digitalized, therefore I can't copy it, because each individual token is taken account of through a computer system that is basically impenetrable to hackers and is mostly impossible to alter the outcomes in any way. And it says here a defining feature of cryptocurrencies is that they are generally not issued by any central authorities, rendering them theoretically immune to government interference or manipulation. This, for many people, is what makes crypto a very exciting thing, but you probably have seen more recently the SEC starting to step in and take steps to regulate the markets, probably for a very good reason. And we have also seen countries like China, the UK now starting to look into digital currencies for their own GBP, or in China, the CNY. So specifically looking into an exchange traded fund, let's understand a little bit about what Investopedia has to say about the pros and cons of investing in ETFs over just traditional crypto. So as we've already talked about, an ETF is a pooled investment security that operates much like a mutual fund. And an ETF can be used and structured to track anything from the price of an individual commodity to large and diverse collection of securities. ETFs can even be structured to track specific investment strategies. And this might seem very complex, but let's say, for example, the technology of AI is about to see a very big boom. And you're probably aware that that's true. Now, picking an AI company that's going to do very well is very difficult if you are not sure exactly about what they do, who's investing in them, all of those different things. But if you can find a fund that invests in a number of AI companies together and is basically created by an expert team of advisors, well, then by investing into their fund, then you may well have a much better opportunity to make money than by investing into individual AI companies. Now, the ETF itself is a basket of securities that is traded on an exchange just like a stock does. Now, this is very interesting because crypto itself doesn't really trade on the stock market, but there are ETFs that are now coming in for crypto that are now being approved in countries like Canada and various others that allow people that are maybe not that savvy with crypto to start investing in crypto related products. And this is a very exciting thing. Much of the big money that exists in like major financial capitals like London, Hong Kong, New York won't really want to get involved in crypto because it's not regulated. That's something that people get very excited about, the non-regulation, but ultimately big money is never going to touch anything that's not regulated because they're set up for failure and potentially massive losses. However, by creating ETFs and floating them onto stock markets, then you give the opportunity for huge money to come in to a regulated market and be able to invest in these assets such as Bitcoin, Ethereum, etc. So we've already discussed exactly what an ETF is, and there are lots of benefits to being an ETF. We've already talked about the risks that are involved with just holding an individual token. So for example, if we look at this basket of tokens here, we've got Dogecoin, which famously is very, very volatile volatile and has seen huge spikes towards the upside, but also down towards the downside. Bitcoin here, less volatile, but also from time to time will also spike and drag everything with it. Now, I know these things because I've spent lots of my time investing into crypto, but if you were to say cryptocurrency to someone who's never heard of cryptocurrency or has heard very little, they might have heard a little bit about Bitcoin, but they don't really know what Bitcoin is. However, they are probably aware that cryptocurrency appears to be coming and going every sort of 2 to 3 years or so, and as we know right now, the crypto market is starting to get moving again. They're probably starting to get interested in crypto, but may not know much about it. So if they don't know much about it, that's often a big barrier to entry. It stops people getting involved because they don't want to go and learn about it. However, an ETF is a great opportunity for them to be able to invest in a market which they think is going to go somewhere without having to invest a huge amount of their own time in order to understand and study different cryptocurrencies. As well as that, by buying all of these different cryptocurrencies, if you have been buying crypto for a while, you'll understand that it can be a bit of a pain to try and find different cryptos. Someone talks about a crypto on a video in YouTube and you think, I really must get my hands on that. And then you go and try and find it on your favorite exchange like Binance or KuCoin, and you can't. You find out you've then got to go to Kraken or PancakeSwap or one of these crazy exchanges in order to just find that token. And this is a huge amount of effort and huge amount of work, and unless you're a serious investor, this is something you're not going to be doing. However, the ETF again allows you to gain exposure to these different cryptocurrencies without having to invest a huge amount of your own time into doing so. Also, another thing is it can reduce the amount of fees and things that you're paying each time you're buying a cryptocurrency. For example, if I want to go and buy some Bitcoin, I might end up paying $14 to $15 every time I'm paying for that transaction, particularly on websites like Coinbase, which are very expensive, although very user-friendly. Now, there are slight variants on ETFs. The ETF relies on owning an actual product. So, for example, the fund itself will own X amount of Bitcoin, X amount of Ethereum, whatever, and if those tokens go up in value, then the money you have invested in the fund also will go up in value in proportion to the amount of tokens and things, or the amount of ETF shares that you hold. Now, on the other side of things, there's an ETP, which is made up of synthetic products. Now, that's probably a bit confusing, but there is derivative markets involved. So there's spot trading. For example, if I've got $1,000 and Bitcoin is worth, let's say, $10,000, I can buy 10% of one Bitcoin or 0.1 Bitcoin for my $1,000. This is a one-for-one trade on spot where I can buy a certain amount depending on the amount of money I've got and the value of that token. However, there are also derivative products such as futures trading and various others where I might be able to use different things such as leverage. So for example, if I've got $1,000 and Bitcoin's worth $10,000, where I can use 10x leverage on my $1,000, which enables me to use or purchase an entire Bitcoin. Now, if the Bitcoin goes up, let's say 10%, then from my original $1,000 investment, I will double my money because I'll make 10%. I'll make $1,000 and I only started with $1,000. On the flip side of things, if Bitcoin goes down 10%, then I lose my entire investment because I only put in $1,000 in the first place and 10% is $1,000. If you're struggling to understand and you want to know more about cryptocurrency, guys, well, I suggest subscribing to this channel in order to be able to increase your knowledge into the space, which I really recommend doing right now because it's a very exciting time in crypto. So if you're wondering who the ETF is for in terms of different investors, well, I myself will prefer to just invest in like Bitcoin because Bitcoin's far more exciting, far more volatile. So it has the opportunity, for example, here where it moved from $8,000 up to around $63,000 in less than a year. So pretty much did 800% in just a year. But then obviously you've seen where last November it went then down to here. In a single year, it dropped by about 80%. Now this is obviously hugely erratic and is a much scarier thing to think about for people who are using big sums of money. So big institutional money who are investing in the billions, not millions, are not really going to want to touch anything where they're going to be potentially down 80% at the end of next year. However, by putting it into an ETF where you might see swings of like 10 to 20% through the year, it's a far more beneficial environment for the larger investor because it protects against the risk and volatility within the markets. So in summary, an ETF is a group or a collective group of different cryptocurrencies, and you can bet on the movement of those cryptocurrencies over time. While you might not see insane gains, you are more likely to see a much safer return on investment over a period of time with much less volatility and much reduction in risk. It's an exciting thing for crypto because it offers exposure to larger institutional money, which will ultimately drive the crypto market to new levels as well. So I think ETFs are a very good thing for crypto, and I think they're going to be here to stay and continue to develop over time. Guys, if you enjoyed today's video and you found it useful, hit that thumbs up button for me. Thank you very much for doing that. And if you're new to the channel, you want to learn more about cryptocurrency, Web3, NFT, and so much more, then hit subscribe and I'll see you in the very next video. Bye-bye.